Right now, on March 10th, 2026, Israel's largest oil refinery is completely offline. Not slowed down, not partially damaged, shut down entirely. The Bazan Group refinery complex in Haifa Bay supplies roughly 50 to 60% of Israel's domestic fuel. This is not a peripheral target. On March 8th, Iran's IRGC launched Kheibar Shekan ballistic missiles directly at that facility. The refinery's power station took a confirmed hit. 3 Bazan employees were killed. The company confirmed the damage in a mandatory disclosure to the Tel Aviv Stock Exchange. All refinery operations and subsidiary facilities were shut down immediately. Israel's energy minister visited the site in person. But here's what most coverage is missing entirely. This strike didn't happen in isolation. It happened within minutes of an Israeli attack. On the night of March 7th, Israeli warplanes hit 30 Iranian fuel depots across Tehran and the Al-Borz province simultaneously. Massive fires lit up the Iranian capital. Thick black smoke blanketed a city of 10 million people through the night and into Sunday morning. The WHO issued a public health warning the following day, saying the damage to Iranian oil facilities risked contaminating food, water, and air. Within minutes of those Israeli strikes landing in Tehran, the IRGC activated its response. Pre-built, pre-named, pre-targeted, this was the 27th wave of Iran's Operation True Promise 4. Not improvised retaliation. A numbered, doctrine-driven counterstrike. That numbering system tells you something critical before we even get to the missiles. Iran had this response sitting in a drawer waiting for a trigger. The trigger was Israel striking Iranian energy infrastructure for the very first time since this war began on February 28, 2026. And Iran's answer was to hit Israeli energy infrastructure back, immediately, with a specific missile chosen for a specific reason. The Kheibar Shekan is a solid-fuel ballistic missile. Its name translates from Persian as Kheibar Breaker, a reference to an early Islamic battle. But the strategic logic behind choosing it has nothing to do with symbolism. It comes down to one word that defines modern missile warfare: preparation time. Liquid-fueled missiles require hours of pre-launch work. Fueling, pressurization, checks, all of it visible to satellites orbiting overhead. That preparation window is a vulnerability. It gives defenders time to detect, track, and respond before a single missile leaves the ground. The Kheibar Shekan eliminates that window. It sits on its launcher, fully ready. Launch order to missile airborne is measured in minutes, not hours. Its range is approximately 1,450 kilometers, more than enough to reach Haifa from inside Iranian territory with significant room to spare. And its warhead is maneuverable. It doesn't fly a clean, predictable arc that air defense computers can calculate and intercept with standard geometry. It adjusts trajectory in the terminal phase, not dramatically, but enough to complicate the engagement window for Arrow and David's sling. In my view, the weapon selection here is not incidental. Iran chose the system that gives Israeli radar the shortest possible warning time. What this suggests is a level of pre-built operational planning that goes far beyond tit-for-tat retaliation in the heat of the moment. Both sides are now targeting energy infrastructure. That is a doctrine shift, and it changes the cost equation for everyone watching this conflict. Drop a comment right now. Does Iran targeting Israel's fuel supply make a ceasefire harder or more likely? Hit like if this gave you the full picture. Brent crude oil surged past $100 per barrel on March 10th, 2026, the first time it has touched triple digits since Russia invaded Ukraine in 2022. That number isn't just a market statistic. It's the direct financial consequence of what happened at the Haifa refinery and in Tehran. But here's what makes this energy conflict structurally different from every previous Middle East oil shock in modern history. This time, both sides are hitting each other's fuel infrastructure simultaneously. That has never happened at this scale before. Israel struck 30 Iranian fuel depots on March 7th. Iran struck Israel's largest refinery hours later. Then, both sides kept going. On March 8th, Iran also targeted energy infrastructure across the Gulf, refineries in Bahrain, Kuwait, Qatar, Saudi Arabia, and the UAE. According to Reuters and Al Jazeera ship tracking data, at least 150 tankers are now anchored in open Gulf waters, simply waiting. They are not waiting for a military signal, they are waiting for insurance. And right now, insurance is essentially unavailable. JP Morgan Chase estimated that covering all the tankers currently stranded in the Gulf would require more than $350 billion in coverage. The total insurance capacity the U.S. government offered to provide on March 9th was $20 billion. That gap tells you everything. An IRGC commander declared the Strait of Hormuz officially closed on March 3rd. Iranian drones hit at least 2 tankers in the waterway. A Honduran-flagged vessel called Nova was struck by 2 Iranian drones and left burning inside the strait, according to Iranian state media. A U.S.-flagged product tanker, the Stena Imperative, was damaged by aerial impacts while berthed in the Gulf region. 1 worker was killed. Maritime intelligence firm. Windward reported that traffic through the strait had dropped by at least 80% from normal operating levels. The Strait of Hormuz carries roughly 20% of all oil consumed globally and about 20% of the world's LNG supply. Goldman Sachs published its analysis on March 3rd. A full 4-week halt through Hormuz adds approximately $14 per barrel to oil prices. Brent crude was trading near $70 before Operation Epic Fury began on February 28th. By March 9th, it had surged past $103 per CNBC. Morgan Stanley Research estimates that a 10% rise in oil prices from a supply shock adds about 0.35% to U.S. consumer prices. That means the move from $70 to $103, roughly 47%, has already added measurable inflationary pressure to the American economy. U.S. gasoline prices hit $3.41 per gallon on March 8th, up 43 cents in a single week, according to the American Automobile Association. The Federal Reserve was already holding rates due to inflation running above its 2% target before a single missile fell on Iran. Morgan Stanley described the Fed's position bluntly: a potential energy shock boxes in the central bank between inflation and growth risk. Iraq and Kuwait have already begun shutting in production because there is nowhere to send the oil their fields are producing. South Korea announced it could run out of LNG in 9 days if the strait remains closed, according to Al Jazeera, reporting on March 8th. Seoul's government responded by creating a 100 trillion won stabilization fund, roughly $68 billion, to cope with soaring energy costs. In my view, the Haifa refinery strike is not the story by itself. It is one node in a system that is now under stress at every level. What this suggests is that the energy war between Iran and Israel has already moved well beyond military strategy into global economic territory. The question is no longer whether markets are pricing in the risk. They are. The question is how long the strait stays effectively closed. The White House sent a message to Israel on March 8, 2026, and an Israeli official summarized Washington's reaction to Axios in just 2 words: WTF. That message, confirmed by a U.S. official, an Israeli official, and a third source with direct knowledge, is the most strategically significant development of this entire conflict. Not the missile that hit the Haifa refinery, not oil crossing $100. The fact that the two governments running this war together have just had their first open disagreement. Here is exactly what happened. On March 7th, Israel's Air Force struck 30 Iranian fuel depots across Tehran and the Alborz province simultaneously. Israel notified the United States before the strikes. But according to Axios, what actually happened went dramatically further than what Washington had expected. A senior U.S. official told Axios directly, "We don't think it was a good idea." A Trump advisor was even blunter about the president's personal reaction. That advisor told Axios the president doesn't like the attack, and then added the sentence that reveals exactly what Washington is most worried about. The advisor's exact words, per Axios: he wants to save the oil, he doesn't want to burn it, and it reminds people of higher gas prices. That sentence is worth sitting with for a moment, because it reveals the core tension at the center of this entire military operation. The United States and Israel launched this war together on February 28th, but they are not fighting it for identical reasons, and they do not share identical objectives. According to a March 10th analysis, citing the Foundation for Defense of Democracies, Israel has prioritized striking regime officials and military leaders. The U.S., by contrast, has taken responsibility for degrading Iran's navy and striking hardened military targets with its own bomber fleet in Iran. Those are different target lists, and different target lists reflect different goals. Israel's stated goal, according to analysts, is structural regime change in Tehran. Washington's goal is more limited: degrade Iran's nuclear and military capacity, create conditions for a negotiated outcome, and avoid an economic catastrophe at home. The New York Times, citing U.S. officials, reported that on the first day of the war, Israel struck a group of Iranian officials the White House had identified as more willing to negotiate. In other words, Israel targeted the very people Washington was counting on to eventually help bring a swift end to the conflict. That is not a minor disagreement. That is a fundamental strategic divergence between two governments conducting what they presented to the world as a unified joint military operation in real time. In my view, this is the detail that most coverage of the Haifa refinery strike and the broader energy war is systematically missing or underweighting. The strike on Bazen did not happen in a vacuum of unified Allied decision-making. It happened inside a growing fracture between Washington and Jerusalem. Iran's new supreme leader was named on March 9th. Mojtaba Khamenei, son of the late Ayatollah Ali Khamenei, who was killed on February 28th, now leads the country. A top Iranian official told CNN on March 10th that the government is prepared for a long war. Iran's foreign minister rejected any ceasefire or new talks outright. Iran's President Pezeshkian had publicly said the U.S. could take its unconditional surrender demand to their grave, according to NPR reporting on March 6th. What this suggests is a conflict where neither side has a clear off-ramp and where the two sides conducting the offensive are no longer fully aligned on the destination. Washington wants leverage and a deal. Israel wants structural change and is willing to burn infrastructure to get it. Those are two different wars being fought simultaneously. And Iran's Kheibar Shekan missile hitting the Bazan refinery in Haifa is the direct consequence of Israel making that choice on March 7th without full American approval. The energy war didn't start because both sides crossed a line at the same moment. It started because one ally moved further and faster than the other expected or authorized. That gap between what Washington approved and what Jerusalem executed is now one of the most consequential fault lines shaping where this conflict goes next. Iran's Ministry of Intelligence quietly reached out to the CIA with a back-channel offer to discuss terms for ending the conflict. That contact, delivered through a third country's intelligence service, was reported by the New York Times, citing officials briefed on the outreach. And here is the detail that makes it extraordinary. Iran's foreign minister was publicly rejecting any ceasefire on the same days this outreach was happening. Two simultaneous signals, one public, one covert. That split tells you more about Iran's actual strategic position right now than any missile launch does. Iran's foreign minister Abbas Araghchi told The National on March 6th, there is no request for a ceasefire and no request for negotiations with the U.S. He explained why directly. We negotiated with them twice, and every single time they attacked us in the middle of those negotiations. That institutional memory, with the experience of being struck while talks were active, is now shaping every Iranian decision at the table and away from it. But the back channel to the CIA suggests Iran's leadership is also running a parallel calculation about how long this can actually continue. By March 5th, Iran had already fired over 500 ballistic and naval missiles and nearly 2,000 drones since February 28th, according to Fars news agency. Analysts noted that the rate of Iranian missile launches had been declining since early March, pointing to either depletion or deliberate rationing for a longer war. Iran's strategy, according to Jonathan Rue of the Jewish Institute for National Security of America, is to broaden the conflict geographically to create exit pressure. By attacking Arab neighbors, Saudi Aramco's Ras Tanura refinery, Qatar's LNG terminals, Gulf military bases, Iran is raising the cost for every country nearby. The theory, confirmed by Times of Israel Analysis, is that Arab governments who begged Trump not to start this war will beg him even harder to end it. Iran tested exactly this logic in June 2025. It fired 14 missiles at Al Udeid Air Base in Qatar, and Trump announced a ceasefire the same day. That historical pattern is not lost on anyone in Washington, Doha, or Riyadh right now. Iran is running the same playbook at a larger scale, but Trump responded differently this time. He demanded unconditional surrender. He told reporters Tehran has lost its navy, lost everything it can lose. He also said publicly that the U.S. should be involved in choosing Iran's next supreme leader, and called Mojtaba Khamenei, the man just elected on March 9th, a lightweight. Mojtaba Khamenei was elected supreme leader on March 8th. The IRGC, President Pezeshkian, and top officials immediately pledged loyalty to him. Iran's IRGC general told reporters the country has capacity to sustain high-intensity conflict for at least 6 more months, per Business Today reporting on March 8th. What this suggests is that both sides have publicly committed to positions that make a fast exit politically costly, but are quietly exploring what an exit might look like. Trump said the war may be short-term on March 9th, per Al Jazeera. He said it while oil was above $100 and U.S. gasoline prices were near $3.50 per gallon. Morgan Stanley's published analysis warns the conflict boxes the Federal Reserve in creates upward pressure on bond yields and slows household consumption. The U.S. Treasury issued an emergency 30-day waiver allowing Indian refineries to buy Russian oil, a direct admission that Gulf energy supply is no longer reliable. That waiver reversed months of U.S. pressure on India to stop buying Russian crude. The energy crisis produced a policy reversal within 10 days of the war starting. In my view, the most revealing number in this entire conflict is not the missile count or the oil price. It is the gap between the public statements and the back channels. Iran publicly says no ceasefire, privately reaches out to the CIA. Washington publicly demands surrender, privately worries about gas prices and the midterm elections. The Haifa refinery burning, the Strait of Hormuz effectively closed, oil above $100. These are the symptoms of a system trying to find a price point for an exit. What happens next depends on which signal becomes louder, the public doctrine or the quiet conversation being conducted through someone else's intelligence service. That is the question that was sitting unanswered on March 10th, 2026, as the fires in Haifa and Tehran were still burning and the tankers were still waiting. If this channel gave you the full picture that the headlines missed, subscribe and hit the notification bell. The next 72 hours will matter more than the last 10 days combined.